Hello and welcome to Insurance in Canada. I'm your host, Rick Padeta. Thank you so much for joining me. On today's episode, we're looking at three stories. Our first story, the Equite Association launching a new campaign to bring awareness to vehicle theft and insurance fraud. Our second article, we're going to be talking about the fallout in the insurance industry from the Air Canada lockdowns now that they are over and done with. And our third article will be looking at some of the restrictions, limitations of business interruption insurance that business owners may not be aware of, but they really need to know about. So without further ado, let's take a look at insurance in the news. So our first story for today, we'll be looking at the Equite Association. We've talked about this association in the past. This is the association that exists in order to lead the fight against insurance fraud, and that also includes vehicle theft on behalf of the insurance industry. So they've come up with a new campaign, awareness campaign. So let's take a look at that. New campaign targets organized crime and auto insurance fraud. Canada's Insurance Crime and Fraud Prevention Organization, Equite Association, has launched a new campaign to raise awareness about organized insurance crimes. And I should add that the Equite Association, this is a nationwide organization. It's not attached to any one particular province. Back to the article, Fraud Never Takes a Vacation is designed to educate and empower Canadians to spot and stop insurance fraud before it strikes, helping to ensure safer roads and more secure communities for everyone. Launched August 13th, the campaign's website includes tips and tools for the public to protect themselves from re-emerging threats, including VIN fraud. Every manufactured vehicle is provided a unique vehicle identification number, or VIN, which stays with the vehicle throughout its lifetime. The number can track recalls, insurance registration, and the history of the vehicle. Revinning is when criminals alter the original VIN to conceal the vehicle's identity so they can sell stolen vehicles to unsuspecting customers. To avoid, excuse me, to avoid purchasing a re-VIN vehicle, Equite Association recommends the following steps. Number one, check the manufacturer's recall site. If the VIN is fictitious, there will be an invalid VIN response. Check a used vehicle purchase a used vehicle from a registered dealership. Order a Carfax report, which will include important information, including if the vehicle has been reported stolen. Getting back to the second point, purchase a used vehicle from a registered dealership. That's not always going to guarantee that you're not going to be purchasing a vehicle that was previously stolen or a vehicle that's being re-VINed. So just because you bought it from a dealership, there might be more protections associated with purchasing from a dealership. It's not going to guarantee it. Plus, buying it from a private seller. The first and third point about checking the VIN with a manufacturer's recall site or using a Carfax report, that should indicate whether this vehicle was previously stolen, never recovered, from those two reports as well. So yeah, dealership does have those added protections associated with it, but you shouldn't be afraid to purchase from a private seller just because of the VIN danger. There is ways to protect yourself to a degree. So, like I said, don't be swayed not to purchase from a private seller. Just make sure you do your due diligence to make sure that this sell is legitimate and this vehicle is legitimate and hasn't been revinned or previously stolen and never recovered and branded as being never recovered. Back to the article, fourth point, ask the seller for a used vehicle information package from the Ministry of Transportation. Google the VIN. Remember, if the deal seems too good to be true, it probably is. And the last point, due diligence. Do you know the seller? Are they asking for cash? Is the meeting spot for the purchase unusual? Equite Association is advocating for an effective national VIN database, which would connect all the provinces to detect and prevent re-VIN fraud. And that last point is definitely in my opinion, one of the most important points from this whole uh, campaign when it comes to re-binning. I don't know why it hasn't happened at this point. That definitely would be because one of the ways that the thieves and organized crime tries to get around the whole VINing issue is taking a vehicle stolen or declared a total loss from one province and trying to re-VIN it and register it in a different province. Because the databases are not connected to each other between different provinces, there's the issue of trying to catch these people trying to commit these sort of frauds by moving vehicles around from province and registering these vehicles from province to province. So I don't know why it's taken so long to try and create a sort of national database to try and fight this aspect of fraud. Hopefully, the federal government is working on this and the provinces will cooperate, because this will require the cooperation of the provinces to make their databases available in order to have a centralized database. But like I said, hopefully this is being worked on, but I haven't heard anything anywhere that this is coming down the pipes. But like I said, hopefully this is being worked on. Stage collisions is the second part of their campaign. A stage collision is a type of insurance fraud in which criminals purposely damage their vehicle by arranging a crash to file inflated claims related to vehicle damage, unnecessary body shop work, or medical expenses, exaggerated personal injury claims. Equite explains. It's true, but most of the time, staged collisions is trying to go after the personal injury side, the accident benefit side. You don't see too many stage collisions trying to commit fraud on the vehicle damage side. I don't see where the where the real money is in that, as opposed to the personal injury side. So like I said, in my experience anyways, from seeing these types of stage collisions, it's usually trying to go after the injury side as opposed to the vehicle damage side. Back to the article, some types of stage collisions include the swoop and squat. In the swoop and squat collision, a driver cuts off an accomplice in a second car who slams on the brakes in front of the victim, forcing a rear-end collision. And that's one of the most common types of stage accidents. If you go onto YouTube or any other video sharing site and look up stage collisions, I guarantee you the vast majority of the stage collisions videos from dash cams, traffic cams that you will find is this swoop and squat, because in order for the scammers to try and collect any money from the other party's insurance company, obviously they can't be at fault in the accident, which is why the swoop and squat is the more popular of the three that they list here, just because now we have one vehicle rear-ending the other. Yep, the vehicle in front is the one who actually caused the vehicle collision, but without corroborating evidence, independent witnesses, it's kind of difficult to prove that the vehicle in back, the innocent vehicle, didn't rear-end the vehicle in front. However, dash cams are a very effective tool in combating this type of fraud. So it's something I recommend to everybody to consider, every vehicle owner to consider getting a dash cam installed. It doesn't have to be a very fancy dash cam or expensive dash cam. There are dash cams that look forward and have a camera that looks back. At the very least, get one that looks forward to help protect yourself from this type of scam. In fact, quite frankly, the forward-looking dash cam would probably assist you in all the three types of stage collisions that the article mentions. So we look at the first one, the swoop and squat. The second one, the drive down, while an unsuspecting driver is backing out of a parking spot. The criminal in an oncoming car waves at them to continue as though they are waiting for the spot. As the victim continues to back out, the fraudster then accelerates, colliding with the victim's car. While I've heard of this type of scam, I've never actually seen this particular scenario being carried out, or anyone being a victim of this type of scam. I don't know if you know anybody who's experienced either the first or second or any of these particular types of scams or a victim of it. Let me know in the comments if you have, but like I said, I've never seen that particular drive down being utilized by a scammer to try and collect money from the victim. And the third one, the bullet left turn. As a victim is waiting to make a left turn, the criminal waves at them to continue through the intersection. As the victim begins to turn, the criminal accelerates, hitting the victim's car. So this would probably be in a situation where we're at a four-way intersection and the two vehicles are at the four-way intersection at their individual stop signs facing each other. One vehicle waves the other to carry on making the left turn, and once they do, they speed up to collide. So that's that particular one. Once again, not could be other scenarios as well. It could be just on a two-lane highway. One vehicle's waiting to make a left turn to go into another street or driveway, and the other vehicle just stops to pretend to let the other vehicle go through. There's no stop signs or anything, just normal traffic. As the victim makes their left turn, the scammer then runs into the victim, claiming that the victim was the one who made the left turn in front of them. So once again, I haven't seen too many. Personally, haven't read or seen too many of those scams involving the bullet left turn. Like I said, swoop and squat is probably the most common scenario, but that's involving two vehicles. There's also stage collisions involving pedestrians. A lot of them who just throw themselves in front of vehicles that are stopped at intersections, or vehicles that are moving very slowly down a street, and they'll just run out into the street, and the vehicle stops because they see this person running out, and they throw themselves onto the vehicle. So that's another scenario where you can find plenty of video online of those types of stage collisions as well. And once again, that dash cam can save you from being caught up in that kind of scam as well, at least being held liable in that kind of scam. So stage collisions are an issue for the insurance industry. But like I said, if the vehicle owners invest in this type in dash cams, that would help protect themselves and protect the insurance company from having to pay out these false claims. Back to the article, there are also fraud party stage collisions in which other people pose as extra passengers in the vehicles. Yep, especially when it comes to the swoop and squat. They may submit false claims for vehicle damage, injury assessment, treatment, rehabilitation, or other assistive devices, and loss of income and services. And the third part of the campaign involves vehicle rental theft. To help prevent rental car theft, Equite recommends a number of precautions, including asking the rental agency about additional security features such as alarm systems, immobilizers, and GPS tracking devices. Number two, bringing your own security devices such as steering wheel locks. These devices make the rental car more difficult to steal and can deter thieves. Number three, parked in well-lit and secure areas, looking for designated parking lots or garages with surveillance cameras, bright lights, or security personnel in unfamiliar locations. Check with hotel concierge or rental host for parking advice. Number four, look like a local vehicle. Keeping a local newspaper on a passenger seat can give the illusion you're a resident. If possible, remove any rental car company stickers or tags and avoid leaving guidebooks or maps in view. You don't see too many rental car companies who still have their rental car sticker on the bumper these days. Especially, I recall, must have been 25 years ago, there was an issue in Florida where tourists were being targeted by criminals in Florida, stopping them in rest areas, going after their vehicles. And I remember back then, one of the ways that the rental car companies were trying to combat that was removing all the stickers from their vehicles, so thieves couldn't tell that the vehicle was a rental vehicle, more than likely being driven by tourists who may or may not have their luggage with them, valuables and whatnot. So I still believe with most rental car companies, they still do that as a matter of practice to protect the people renting the vehicles. So like I said, that was quite a few decades ago that issue came up in Florida. I haven't really heard too much about it happening these days, where criminals are targeting tourists. because of the noticing that the vehicle is a rented vehicle. Normally, the issue is people doing stuff like having luggage in the back seat or carrying a lot of items in the back seat, but that's not just tourists, that's anybody. So when you're going out, try and avoid having anything inside the vehicle, put it in the trunk if your vehicle has a trunk, or in the back area. If you're in an SUV, hopefully you have like a cargo cover, just so there's no incentive for somebody to try and break into your vehicle, whether it be your personal vehicle or a rental vehicle. So good stuff from Equite Association. Always good to bring up these points to the general public just so they remain diligent. Our next article involves the Air Canada strike with their flight attendants and the issues with the travel insurance industry, the impact from it. So Air Canada strike has ended, but travel insurance challenges remain, with flight attendants securing a deal. The walkout is prompting a closer look at the role of insurance during major labor disruptions. Air Canada's operations are slowly coming back online after a 3-day strike by flight attendants left much of its network at a standstill. The walkout, which began early Saturday morning, forced the airline to ground all flights operated by Air Canada Rouge until service partially resumed Tuesday afternoon. The restart has not been seamless. The airline has warned that it could take up to a week or more before schedules are fully stabilized, as aircraft and crews remain out of place. Travelers should expect continued cancellation and delays until operations are back to normal. By all estimates, the strike disrupted as many as 130,000 passengers per day, with over 700 flights canceled in its initial 2 days, a scale that has rattled both passengers and insurers alike. According to Dan Keon, Vice President of Marketing and Insights at Allianz Global Assistance Canada, the strike's fallout is felt beyond grounded planes. The strike clearly has had significant implications for travelers. It has been a massive disruption for hundreds of thousands of travelers, according to reports from Air Canada. For the industry itself, any major travel disruption will create a lot of noise. In this case, though, initially a lot of that activity has been related to customer inquiries. Customers just wondering what protection they have, what coverage they have through their various insurance policies. From an insurance perspective, Keon noted that it is still too early to measure the full financial impact because Air Canada is the first payer in these situations. The airline is responsible for issuing refunds or other alternative travel arrangements. Travel insurance does play a role, he said, particularly for additional expenses, but most of the immediate burden lies with the airline itself. As far as catastrophic losses, I don't think this will be that type of situations for travel insurance providers, at least not initially, Keon said. So yeah, not all travel insurance is the same. It's not like automobile insurance where it's pretty much the exact same policy regardless of who you purchase it from. Travel insurance policy coverages vary wildly from insurance company to insurance company and from plan to plan. So if you purchased a travel insurance policy that only covers emergency medical services, that'll be one of the cheaper types of travel insurance, and it's very important to cover the medical expenses if something happens while you are out of the country. However, those types of policies do not cover stuff as trip cancellation, trip interruption, loss of baggage. That's a more comprehensive type policy. And even if you have that more comprehensive type policy, not every policy is going to cover trip cancellations, trip interruptions, trip delay caused by labor disputes. That is excluded from some travel insurance policies. So if that is a concern to you, you should speak with whoever you purchased the travel insurance policy to confirm that labor interruptions, labor disputes are covered under your policy for trip cancellation, interruption, delay. So if you have a travel insurance policy that covers trip cancellation, interruption for any reason, you'll be covered for that. But like I said, not every policy is going to have that. The issue is most people do not concern themselves with that unless it it's about to become an issue. So back during the COVID days, nobody had even considered looking at their policy to consider whether they would cover for hospital medical expenses related to pandemics, and even the insurance industry, the travel insurance industry wasn't prepared for that as well. So that became a huge issue. Hopefully, some of you still remember that back then. Trying to find proper coverage should you come down with COVID while you were traveling outside the country, if you were able to travel outside the country. But even after travel restrictions started being lifted, that became a concern because COVID was still around, and many people were concerned, would they be covered under their travel insurance policy? Uh, should they contract COVID while they're away? However, who's really concerned about it these days? How many people have gone to look to see if their policy covers them if they catch COVID while traveling overseas today? I don't think too many people. I could be wrong myself. If you have personal experience, if you're a travel insurance specialist and get calls all the time about COVID coverage, even today, please let me know down in the comments. But my own experience, no. These types of issues only become concern to members of the general public when they make their appearance. So people are concerned now whether their policy is going to cover them for labor interruptions, labor strikes, labor unrest. However, in 2-3 months, when everyone's forgotten about this, will travelers remember to look that up under their own policy when they go out and about outside of Canada? Who knows? Hopefully they will, but like I said, it only becomes peace of mind when it becomes current. Back to the articles. Still, he expects the disruption to spark renewed attention on the role of strike coverage in travel policies. I think it will. Anytime there's an event like this, there's always a spike in awareness. Whatever the most recent major event has been, that becomes the top of mind concern for travelers, for brokers, for everyone involved. And that's not just travel insurance, that's all types of insurance. Nobody's thinking about ice storm coverage in August. But when we're in February and we get a report that an ice storm is about to hit the area, in 2 or 3 days, now everyone's concerned about ice storm coverage. But nobody is concerned about tornado coverage in February. So, like I said, unfortunately, that's kind of the case when it comes to most types of insurance. People are only concerned about the type of perils when it becomes front and center, when it's kind of staring right in front of them. Hopefully, he added, it will also mean that people will take a moment to review their policy wording to understand what it actually covers rather than just assuming. Depending on the policy, there may or may not be benefits that provide protection in these scenarios. That heightened awareness, he added, presents an opportunity for education across the industry, both for brokers and distributors and for travelers themselves. When asked whether airline strikes could become a more prominent underwriting concern in Canada going forward, Keon emphasized that labor disruptions are hardly new to the travel sector. Yeah, that's very true. Airline strikes are nothing new for the industry, he said. This most recent strike just highlights how disruptive they can be. Given that Canada has a very strong air passenger protection regulations, the responsibility for taking care of affected passengers ultimately falls on the airline. That said, travel insurance providers will no doubt assess the frequency and impact of strikes more closely and adjust their underwriting strategies accordingly to ensure policies remain relevant and provide adequate protection. And yeah, that pretty much goes with every type of insurance. Once again, always take some time to try and review your policies. Become aware what, especially the restrictions, limitations, and that'll become more relevant when we look at our last article. But travel insurance, yeah, look at labor disruptions, interruptions, whether that's covered for your travel interruption. Also, for the medical side of the travel insurance, if you're someone who engages in high-risk activities, extreme sports, and you're traveling abroad, even scuba diving can be considered a high-risk activity, extreme sport. A lot of travel insurance policies will exclude coverage if you're injured from one of these types of activities. So if you're planning to engage in one of those types of activities, look at your policy wordings at the exclusions and see if that's excluded, because if it is, you're going to have to either try and find alternate coverage that's going to include the type of activity you're going to be undertaking, or maybe just don't undertake the activity unless you want to, take on the burden of the financial risk if something happens. So being forewarned. And our last article talks about business interruption coverage. This is obviously only going to be applicable to businesses. This is not going to be for affecting or of concern to your average everyday citizen. But if you do own a business and that does have insurance and does have business interruption coverage, just take note of what we're going to be talking about today. Often overlooked business interruption coverage gaps. The standard 12-month coverage gap may not provide enough time for recovery. Business owners are starting to question whether the standard 12-month limit on business interruption coverage provides enough time for recovery, says Maz Moini, commercial expert at rates.ca. Many business owners believe that if their business shuts down due to an extreme weather event such as a wildfire or flooding, insurance will automatically cover the lost income, but that's not always the case. Business interruption coverage only applies if the underlying damage is caused by an covered peril, which is correct, which was a huge issue back in the COVID days because so many businesses were forced to shut down. They tried to place claims under their insurance policy, their commercial insurance policy, to try and claim for the loss of income because they were shut down, but unfortunately the claims were denied because there was no underlying damage to any property that would have been covered under the policy itself. So that's something nobody thought about back then. Business owners didn't think about back then. Of course, nobody could have foreseen the type of shutdown that occurred back then either. So back to the article. Even then, standard policies often cap coverage at 12 months, which may not be long enough to rebuild, reopen, and recover, as we've seen with businesses affected by the Jasper wildfire. She says the good news is that most insurers do not offer extended indemnity period. Most insurers do offer extended indemnity periods of 18 or 24 months for an additional premium, but it's something owners need to proactively request. So, yes, it's true. When it comes to business interruption coverage, it's going to be limited. There's going to be a limit on how much, so a monetary limit as to how much is going to be covered. It depends. There's different types of business interruption coverage. I'm not going to get into different types, but some business interruption coverages will have a monetary limit, but some will also have a time limit. So even if the monetary limit has not been used up, once we reach the 12 months after the loss occurs, then there's no more coverage for business interruption. And 12 months is the standard amount. Yes, as the article states, some insurers do offer 18 to 24 months as the time limit as well. Of course, you have to make sure that the monetary limit is sufficient to cover 18 to 24 months as well. Whether you need that or not is going to depend a lot on your type of business and where you're running your business from. If you're the owner of a shopping plaza and something happens to that shopping plaza that causes it to be completely destroyed, such as a wildfire, for instance, yeah, you're not going to rebuild that thing in 12 months. I don't care if the contractors were waiting in the wings to start trying to clear away the debris as soon as the fire just passed. You are not, even if it's a small plaza, does not matter. You are not getting that plaza rebuilt in 12 months. You'll be lucky to rebuild that plaza in 24 months. However, if you're a contractor, if you're a drywaller, if you're a painter, if you're a plumber, and your business, it's mobile. Most of the contractors do not have a location. They're pretty much operating out of their house. Even if their house catches on fire, and all their tools burn up, it's pretty easy for them to replace their tools and get back into business. So for those types of operations that can get back on their feet rather quickly, it's just a matter of replacing some equipment that's readily available. Would business interruption coverage be required for these folk at all, let alone looking at an extension? Now, obviously, if they do have a shop and there's shop operations, yeah, now we're looking at a different scenario. However, even in that case, if they have a separate shop that's not part of their house, it's a different location, and the entire shop burns down, yes, it's going to take some time to rebuild the building. If they don't own the building, if they're just a tenant in that building, could the tenant of the building find another location in which to operate from? If they could, then it's just a matter of replacing the equipment, replacing their supplies, and getting back up and running. So for the building owner, extension 18-24 months definitely be in consideration. For the tenants themselves, unless they really need to stay at that particular location, they may be able to resume operations at a different location. So like I said, it's not black and white. It's going to be individualized for each risk. So if you're a business owner, check to make sure that your policy does have business interruption coverage. If you're a building owner that rents out spaces, rents out units, it may be called rent or rental coverage, rental income coverage, as opposed to business interruption. But yeah, speak to your broker agent to make sure that you have that coverage if you're unable to find it, and how long what's the time period that the coverage is going to be in effect for, and do you honestly believe if the worst case scenario, the entire structure, whatever, were to be destroyed, could you realistically rebuild that structure in the time period being provided, in the coverage period being provided? Take into account maybe it's just your building that got destroyed. What if it was your entire town, like the town of Jasper, or with Fort McMurray, a large portion of the town? So it's not only your building that needs to be rebuilt, there's other buildings that need to be rebuilt. How much time really is that going to take now to try and rebuild your building? So there's a lot of factors to take into consideration when it comes to business interruption, and that's something you really need to discuss with your broker or agent as to, do you have the proper coverage under your policy? Back to the article, even when a claim is approved, the payout may still fall short, Mione warns. Most business interruption policies have a waiting period of 48 to 72 hours before coverage begins, and once the clock starts ticking, many businesses underestimate just how quickly 12 months can pass, especially if delays stall recovery. Yeah, that waiting period of 48 to 72 hours, insurance companies only want to deal with serious issues. If something happens, a minor incident at your place of business, but you're able to say it's a water leak that occurs at your place of business, but it wasn't a major water leak, you're able to get a plumber in right away to deal with it. You can clean up the water, no lasting damage, you're back up and running, in a day and a half. That's not something the insurance company really wants to consider, even though the damage might have been covered under your policy. That's still a small claim that insurance companies really weren't, the policy wasn't really meant to address. So that's why they have these waiting periods. Further rebuild timelines can stretch well beyond a year due to labor shortages, permit delays, for sure, and supply chain issues. In a place like Jasper, where 2024 wildfire caused extensive property damage, recovery has been slow. She recommends business owners review the following policy pitfalls: which perils are actually covered under the insurance policy, how long business interruption coverage lasts and whether it's enough to recover, whether there's a waiting period before coverage begins, and whether optional endorsements are in place for added protection. Business owners should consider endorsements that extend business interruption coverage duration, include utility service interruption, or address supply chain disruptions. These are especially important during large-scale weather events, which indirect impacts are common. So, good information there. So that is it for me for today. I want to thank you for joining me. If you like what I do here, please leave a like on this video. Please subscribe for more. Follow Insurance in Canada on X/Twitter. And a reminder, these videos will be available on Spotify as audio podcasts. So until next time, bye-bye.